All right, welcome to At the Buzzer, our market recap. Check, check, quick sound check. Everyone hear us loud and clear. What's going on, Coach Paul?
Oh, I hear you loud and clear, Coach Jay, as we make new lows in the indices. What a day.
What a day it was in the markets. Pretty wild day. Not my best trading day. Say that for sure. Did what I said not to do, but hopefully everybody else had a good day out there. How was your day, Coach?
I had a very good day. Um,
Love to hear
didn't
it.
trade much, so it's usually a good day for me. When I'm trading a lot,
Yeah,
it's not a good day, but I caught chunks of the crude and the indices, so it's just another day.
good stuff. Good stuff. I did get a haircut today, so that's good. Trying to
Yeah, it
decide
looks
how
good.
I'm trying to decide whether I like it or not. Yeah, it looks all right. Maybe I'll trade better
Yeah,
with this haircut. What did Deion Sanders say? Look good, feel good.
yeah.
When you feel good, you play good. When you play good, they pay good. Uh, that's the that's the
That
goal
it?
here. Yeah, I think that's
Well,
it.
you
Something
look
like that.
good.
Thanks, man. I appreciate it. I need that after the day that I had today. But welcome at the buzzer. Welcome to At the Buzzer, our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. I'm Coach Jay. I've been a Topstep performance coach since June of 2023. And that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some of my experience and knowledge and hopefully help you become a better trader.
Stuff. Thank you for that, Coach Paul. You are all our chat, our audience. We appreciate you being here each and every day that you join us. We cannot do these shows without you. We're going to do a little something different today. Um, See how you guys like it potentially, and we may add something to the show. But let us know how you guys did in the chat. Were you up on the day, down in the day? Anything that you learned from today? It was Fed Day. We did have PPI as well. So let's just get right into it. Taking a look at the news, PPI came in a little bit higher than expected. 3.4%. Forecast was 3%. Month over month came in at 0.7%. Forecast was zero point 0.3. Core PPI came in at 3.9%. Forecast was 3.7%. We also did have factory orders coming in pretty much in line with expectations. Crude oil inventories. Crude has been on everyone's radar lately. 6.156 million. Forecast was negative 1.5 million. We did have the Fed's interest rate decision. They are keeping rates the same. Anything you want to say on the news, Coach? Any opinions on the Fed's rate decision and Powell's second to last Fed rate decision as Fed chair?
The only thing I have to say is everything went as expected, no surprises, and the market just kept on making lows. I think that's the headline.
Right.
What's going to save the break? I still believe the headline is hiding behind private credit and their woes.
Mm,
That's not going away. But as far as the Fed, one of the things it was all expected, and the reaction was continue to go lower. We'll go through more of that. But once again, the one thing that's not being spoken is the silence is deafening to me. Is the problems in private credit.
we may hear about that sometime soon. We do have earnings that are out as well. Micron just reported their earnings. Looking at that right now, that could be some of the selling that we're seeing here. After the close, Micron was trading 460 bucks. Actually, it's popping now. See, knee jerk reaction to the upside, and it's kind of flat. Micron revenues estimates were 19.74 billion, came in at 23.86 billion. Earnings per share came in at $12.20. Estimates were $9, so they beat there. But the stock is trading pretty much flat here. Powell did say that he thought the increased energy cost was going to raise inflation. Of course, the Fed's goal is to tame inflation. So higher oil, gas prices, maybe a little bit of a concern for the Fed here. Anything else you got on the news, Coach Paul? Or should we get right into the charts?
No, but crude is making new highs as we speak. So
Continuing the
Once
rally.
again, okay, as Coach Hoop says, are we going to see 100?
Jeez.
Um, do we see 110 tomorrow?
Right.
We'll
Seeing some
go over that later.
for sure. Seeing some escalations just with what's going on in the Middle East. Again, pray for peace. Uh, saw some escalations today. Riyadh dealing with some missile attacks. Shout out to our guy Mohammed. Hopefully everything is all right over there. Let's take a look at the quote board. We got 36 different markets we can trade with Topstep accounts. And today to the downside, it was platinum down 5.55%, silver down 5.63%, and micro Ethereum futures, our biggest percentage mover to the downside, down 6.55% to the upside. Of course, the energies. Crude oil up three and a quarter. Natural gas up 5.01%, and heating oil, our biggest percentage mover to the upside, up 9.25%. Let's talk about our big four. We already mentioned crude up 3.77%, continuing to rise as after the close. Like Coach Hoop said, do we get to? All right, I got to pull up a depth of market here. What's up here? Here's to see what's up at 100 in crude. 83 contracts at 100 in crude. Let's see if we get those filled before we close here. But to talk about our big four, we had crude up 3.6 right now. The S&P down 1.65. Gold, huge sell in gold today, down 3.65%, and the NASDAQ down 1.61%. Wrap up our big four. Let's take a look then, Coach Paul, at let's take a look at the NASDAQ on the daily as it's making new lows. As crude rallies, the NASDAQ is going to sell off. NASDAQ on a daily, what are we looking at here?
Acceptance under the 200-day moving average. And that's the best way I can say that is we've been playing around. We're still under the 20-day moving average. If there was a catalyst for a rally, it would be FOMC, and we talked about that yesterday. A neutral FOMC and a close under the 200 and volume picking up. I'm starting to get pretty negative on the NASDAQ here. And by the way, most of the day it was the strongest index out there.
Yes,
Um,
yes, it was. Yes, it was. But after that, after the Fed, it really got going. It really looked like the market waited and then said, "Okay, we give up." But really strong close below that 200 moving average. One of the lower closes of the year so far, and spending a decent amount of time under this 200 moving average. Because we did have a rollover, we're not going to see what it looked like in February, but February of 2025, but starting to look very similar here. Spending a lot of time under this 200 moving average, and a lot of uncertainty and maybe negative news flying around, right? There's a war going on. And as crude oil prices rise, we see that inverse correlation. Coach Paul, did you hear today on Topstep TV? The strongest inverse correlation is between crude and the Dow.
I missed that, but that would make sense. Wow. Yeah.
Yeah, crude.
Blue chip against crude. That would make sense.
Yeah.
Who's trading the Dow anyway?
Who's a Dow trader out there?
Ask our audience if they've noticed that.
Yeah.
Wow.
Negative 95% inverse correlation. Um, and in the Nasdaq, it's like negative 55 or something like that. So much stronger inverse correlation. Rich Pocket in the chat is trading the Dow. New lows there in the Nasdaq 24,602. Let's just take a look at the 30-minute chart here. Coach Vince, of course, Coach Vince is trading the Dow. Um, Last night we had a really nice rally. These markets are presenting opportunity. I'm a little frustrated, chat. Not gonna lie. Today should have been a winning day. No excuse for it. I have to be a better trader. But uh, beautiful trade last night, Coach Paul. As crude oil was selling off, we can see this inverse correlation playing out. I'm actually just gonna pull up crude oil, the crude oil overlay on this chart because you can see it happening. Take all the moving averages and everything else off. The red and green are crude oil, and the blue and orange are the Nasdaq. And look at that inverse correlation. Don't get
It's
dizzy.
like looking into one of those circus mirrors.
Right.
Yeah. Do a line chart. Can you do a line chart on them?
Yes, you can. There's the line chart in crude oil and the line chart in the NASDAQ. There you
Oh,
go.
wow. I like that a little more.
Yeah.
Wow. You see a
It-
butterfly. This is
yeah.
pink, the VWAP. Yeah. Yeah, I see what you mean, but they're 97%. That's
Yeah.
quite the spread.
Yeah.
I love it.
I mean, we could see it continuing to play out here, right? That orange line, crude oil, as it's rising, Nasdaq selling, and again, this is not a correlation. Go back February, not the same correlation, right? They're actually kind of moving together. So this is to me is a perfect example of adapting markets, and what moves a market today may not be the same catalyst that moves a market 6 months from now. Um, but high oil prices, Coach Paul, there was a question in the chat earlier. Maybe you could
Mhm.
speak to it a little bit. What why are we seeing this correlation? In your own words,
Oh,
it doesn't even have to be the right answer, but why do you think?
uh, in my humble opinion, no, the answer direct. Remember, crude oil, think of it this way, is the lifeblood of the world economy.
Right.
And we try this is the aorta. Um,
Mhm.
and it affects the effects of the price on crude affects not just what you put in your tank in your car.
Yeah.
It touches everything from plastics to pharmaceuticals to it goes on. I mean, so the Dow particularly represents blue chip stocks, the largest stocks that represent the economy as a whole. So that relationship with crude oil is, well, it's 99%. So
Right.
that's why it's affecting it. And
New lows.
remember,
Nasdaq is continuing to sell here.
yeah, this is I just bought a crude. I'm gonna sell an S&P. Um, maybe I should be selling the Dow. But
Yeah.
I mean, this is direct. We know it too. And it's not just here locally
Yeah.
in yourself, your neighborhood. It's around the world. That's less. That's that cost. And we heard it from Coach Powell. Yeah, I think I like that. Chairman Powell is inflation. It's hugely inflated.
Yeah.
So and it doesn't look like it's going to be solved. So the uncertainty of the price of crude is creating even more anxiety
Yep.
for good reason. I mean, we could see crude go to. I mean,
It was up near 120s not too long ago. And with everything going on right now, it does seem like escalations are picking up a little bit. So we could see crude oil rise pretty quick here, and that would lead to selling in the equities as we are continuing to see the NASDAQ make new lows. We are at lows of the week right now, and last week's low in the NASDAQ 24 217.50. Again, spending a lot of time on the higher time frame charts, but this is important
for
here.
good reason.
Yeah, when the session opens up tomorrow or tonight in an hour and 30 minutes from now, if crude oil is continuing to rally, nothing we say here is for financial advice or any trading or investment advice. Crude oil is rallying. I would not be the first to try to jump in front of the Nasdaq and buy it. Uh, that is my opinion. I know what I'm going to be doing. But again, last night we saw a pretty nice rally. Crude oil was selling off. Actually, all the profits that I made on the day before I gave them up trading gold was short crude oil as the equities were rallying. Crude was selling, the equities were rallying, really nice push. But from PPI on, this was find a place to sell this market. And Just a beautiful trend. Anything you want to say, Coach Paul, on the 30-minute chart here or shorter time frame in
Yeah, just look at
Nasdaq?
it. We had that rally. We had urgency. Great rally. Actually, it got to the first level of resistance. But key point here is that rally died when we closed below session VWAP with volume at that time. We couldn't recover it and never got above it. So, what I take from that is the shark, aka institutions, were selling, and we had trapped buyers. Whether those buyers were short covering
Yeah.
on that rally earlier, but the shark came and said and started gobbling up longs. And look at that VWAP. Once it went negative,
Oh, yeah, it
it
turned hard.
tried to recover, and they said, "We got more for you
Yeah.
all day long."
Little bit of a relief bounce on the opening of the equities, but never reclaimed that full session VWAP, which is this red line. We did bounce off that 200 moving average. We were talking about this during the opening call. Price was trading below it, volume wasn't,
It,
which could be a really nice opportunity for a long, right? We get to see the market like this, right? We get the benefit of hindsight doing this after the fact. If you bought this here off this 200 moving average, and you took your money, look at where we rejected though. Big fat round number levels, right? Remember we said this the other day? You could develop a trading strategy just looking at what happens when the market approaches a major level. If this was good buying off of this 200 moving average, they would clear 25,000s. The fact that they didn't should be a sign, especially on a downward sloping VWAP. Um, so that it could be something that you look at, but you could have bought the equities today and made money. Um, because
uh,
before the Fed, the Nasdaq was just trading like the range bound market we've seen it be. Go ahead, Coach Roll.
my biggest trade was buying that breakout yesterday.
Last night.
Last night on the open.
Nice, nice.
I mean, but like you said, there's plenty of opportunity, but you have to have a plan for every trade.
Absolutely.
Also, observing the flow of the market. To me, there's no better way for personally than VWAP. And the fact that on these after we broke through that, I kind of changed my outlook.
Yeah.
Not because I was reading headlines, but it was, "Wow, look at that VWAP. We're not recovering it." I'm looking for. Then I begin to look for failed buying,
Yeah.
and that really didn't happen until later in the day.
Right. Uh,
Look at that under the
right around.
200. One of the things with the 200 is I'll put a 5 minute um, anchored VWAP every time it closes below it.
Hmm. Yeah,
Um,
and it never volume never settled back above there. Uh,
no,
Never settled back above there. Abed in the chat says, "I'm going to stop thinking about correlation and stick to a chart. A chart is a chart." Nothing wrong with that, Abed. Nothing wrong with that. If you trade the Nasdaq, you only want to look at the Nasdaq. Only look at the Nasdaq. Uh, you don't have to see the correlation playing out. And if it's too much information for you to be able to process and make a decision, then yeah, you don't need it. Um, I know that there are some traders right now who are specifically looking for, hey, when oil starts moving, I'm going to sell or I'm going to trade the equities, but it's really up to you. Really up to you. Nice job, Antonio. Passed 50% of that combine today and locked out. Nice job.
good
Uh,
job.
the S&P, very similar story here. Got under VWAP, got under that 200 moving average, consolidated around there. But we're selling this early, selling it before the Fed, and then we just saw it, kind of expedite once we got that Fed rate decision. Here is the 2 p.m. Eastern time candle, and again, we say all the time, and I kind of wish I saved some ammo for trading this. Look at the news candle as an opening range trade. This is an urgency trade in the middle of the. That is a gift. That is a gift.
And
It was, yeah, that is a gift.
that was that was the CPI or PPI number.
No, no, no. This is the Fed rate decision. 2 p.m. Eastern
Yeah,
time.
there you go.
So the biggest news that everyone is waiting for, what did we get? We got an urgency short trade without it wasn't a ton of risk, right? I think it was already assumed what was going to happen. And is this an easy trade to take? Obviously not, right? We know the press conference is coming up. We know that the Fed chair can say anything that gets these markets moving. But this is a the way we take this trade, Coach Paul. This is a 14-point risk in the S&P.
Yep.
It sounds scary when you have to take it in uncertainty, but if you can identify where the risk limiter is, the uncertainty doesn't matter. He could say, "Hey, you know what? The president said the stock market's going to double. I'm going to make a decision right now that's going to make the stock market double. If it doubled, you get stopped out right here." And then it could double without you.
Well, you just mentioned the word uncertainty,
Yeah.
which personally, when I hear on the major financial news networks, the the market abhors uncertainty,
Mhm.
right? We hear it all the time. As a trader, that's all we get is uncertainty, right? Because look, that's all we get. There's no certainty in
Not at all.
trading. So at one point, just like you measured that,
Mhm.
so that's what you're going to pay for making a decision in an uncertain environment. That way that's your certainty. See,
Yeah.
it's the subsidy. You can embrace uncertainty. I'm willing to pay for this risk. Think of it that way. And that's your decision.
Yep.
And when you get good at it, you can put that on, and no amount of staring at the screen or cheering it on or swearing is going to change it.
Right.
I know I used to do all of the above. Market didn't really care, but that's a great example coming into the uncertain environment, measuring the risk, and also under this is underneath the session VWAP,
Yep.
under the news candle with urgency. So
Yeah.
you've got a nice narrative, right? Or nice, better word yet is an observation. Okay, now what's it going to cost me? Or, oh, this looks bad. I'm just going to sell it.
Mhm.
You have more control.
Yeah.
Like, you know what it's going to cost because this was so clean, but it's not always that
It's not
clean.
always gonna happen that way. Right, but
Yeah.
I think anytime a chart looks this clean is an opportunity to do this, right? There's gonna be a different catalyst for it every time, but every time it looks this clean, it's like, "Okay, this is just flow," right? And, Cordy just said it in the chat, that's selling with a purpose, not effing around selling, right? And I watched that breakdown for 2 hours. So what we were trying to do here is make as much gain as much clarity in uncertainty to then just make a decision. We don't know what's gonna happen, right? But in this case, how can I trade a Fed rate decision? How can I trade a PPI number? How can I trade CPI? If the structure looks like this, where I let the news candle play out and then the structure looks like this afterwards, here's a way you can do it. Is this a guarantee that it's going to work out? No, Coach Paul just said it. Doesn't always play out this way. We can take a look at that PPI candle. PPI candle was completely different. Actually, it wasn't that different. Uh, it wasn't that
It's a
different.
structure.
It's the same structure, right?
Right.
Price volume left the range. Here, I don't have to guess PPI. This is a 20-point candle in the S&P. I don't want to try to guess that. But same structure here. Price and volume left the range to the downside. I can get in it. Now, that makes this all sound very easy. It's simple. It's not easy. Right? We have to, again, deal with the uncertainty, be able to manage the risk, position size it correctly. There's all these other things. But from a strategy perspective, let the range establish. Let the market tell you how it feels about the range. We rejected right off the 50% of that PPI candle, and then volume left the range. There was a clear flow. We did the easy part. The easy part is identifying the flow. The harder part is trading it and executing it, right? But when you can identify these things more in real time, it makes taking these trades in uncertainty a little bit easier. Um, and then you just got to manage yourself. Edge, risk, behaviors. That's all trading is. Um,
I like that.
Thanks,
Edge,
coach.
risk, behavior.
Thanks. I came up with that like 3 weeks ago, doing a session in Discord. I was like, how can we break down trading into three things? Your edge, how you manage your risk, and how you behave when the market gives you an output. Anything else you want to say about the equities?
I no. Let's move on to other fields.
Yeah, we're going to crude. We're going to crude. Uh, Getting ready to trade those $100, 140 contracts at $100 even in crude oil. Made a new high after the session closed, 99.78. Futures markets still trade about 20 minutes after the equity close. Crude oil on a daily. What are we seeing here?
I I just once again from yesterday, I was to say this is a pretty bullish chart. Now we have that wicked wick of the east.
Yeah,
Um, but think of this or that we're back above that 50%. The dips are being bought. I mean, speaking of wicks, things are heating up. They're not being resolved in this war. So you got to ask yourself, who wants to be short crude?
yeah.
And then again, always ask the other side, if I'm owning this, where are the shorts and where's their pain? I, that's why it's ultra sensitive market. The only persons that really are going to be stuck are shorts. So this could really start igniting. I see that if we just remove that wick, right, or we remove that trading day, this is a
It's,
market that is on fire.
it's the highest close we've seen.
Yeah, it's the highest close. Good. So put on a line chart. It's-
Got you. I knew it was coming.
yeah, you tell me what that looks like. It gives a different perspective, doesn't
It
it?
does. It does. That is the highest close we've seen. We heard the president earlier this week, or was that late last week, saying the war is going to be over soon. But if we continue to see escalations, uh, there's two sides to that, right? There's two sides to that war. So, there's potential for crude oil to sell back down to 90s. And Jack has been saying this, and I kind of agree with him. There's a headline that could have crude oil trading at $140
Yep.
tomorrow. There's probably a lower likelihood of a headline that brings us down to $60, right? So there's just pressure building up below this market, which makes it, and I'm saying this as somebody who made my money to the short side in crude today and then lost it in gold. But there's pressure building underneath this market. I got to stop saying that. There's pressure building up underneath this market that makes it hard to short. So if you make money in crude to the short side, I think you have to take it. We closed back above, or we closed above 50% of the uh, major sell off that we had. Potentially getting ready to test $100. I would be watching crude oil tonight. I would be watching all the markets tonight. If you're going to trade, right? Of course, you got to take some time off the charts as well too. But tonight is probably going to be pretty interesting. Let's take a look at the 30-minute. Could you kindly say that again? Edge, risk, behavior, right? So, what is your edge? How can you approach the markets every day? How much are you risking? It should be defined before you place trades. And then the last one is your behaviors. And that's probably the biggest thing. Um, your edge, it's a strategy. Your risk should be defined, should be, somewhat dynamic, but, it shouldn't be wild. But the behaviors are the big thing, right? When I win a trade, how do I behave? When I lose a trade, how do I behave? When the market does something unexpected and I get stopped out, what are my behaviors? Because that's going to either the way you behave is either going to keep you in the cycle of good trading where you once you get an output, and shout out to Stephen Goldstein who wrote the mental game of trading, different from Jared Tendler's book, both great books, but Stephen Goldstein, the mental game of trading. He I shared this before, but there's like that cycle, right? Have an input, the market processes some information, gives you an output. If once you get that output, you break the cycle and just start doing some random shit, then you don't go back into the loop of edge risk behavior, right? You just start hoping things are happening. Um, the edge should define your trades. The risk should define your how much you're willing to pay, and your behaviors should keep you in that loop. Uh, crude oil on the 30
You know, it was interesting. The setup last night is we had a nice break. We had urgent
should
selling.
be. I love this trade.
Um, well, it wasn't quite urgent, but we had selling, right? VWAP, we got under session VWAP after trying to rally. Then we left that range. We had a nice breakdown. Um, but look at that when we made that low, that half-hour candle,
Highest volume of the
and
day.
highest volume of the day at that point. And what is that? It's almost a dragonfly candle. What is that? Off of lows, it finished basically where it started at the lows on high volume. That's anytime I see that now, I'm going to highlight it, frame it out. And boy, what did it do off of that? We finished higher. We had a J trade. We closed higher. Then we recovered session VWAP, which changed the direction of session VWAP. It was ticking down.
Yep.
Then we rallied to the pivot, which was back at the opening of Globex. And once we got above that, and this goes back to our discussion, who and you know you were talking about Jack. Who's under pressure here when Jack said you could see a headline that'll drive crude up to 160.
Right.
Well, this is that in a microcosm.
It is.
The sellers get wiped out quickly. So the nervousness is the to the upside.
Yeah.
This was that exactly.
Yeah, and it's almost like today's almost inverse of what we're used accustomed to seeing, right? If you're looking at the equities, when equities get really volatile, there's always, there's usually more volume to the downside. Not in oil right now. All the energy is to the upside, right? All, building volume as the market is pushing up. There's some real buying here, whether that's buying, getting long, or some short covering, whatever it is. Uh, there got to be some market participants short under $100 in crude oil, and those might be our new buyers that rally is here if there's a short squeeze going on.
Yeah.
Really nice opportunity to trade crude today. Go ahead, coach.
Yeah, there was another one today when we broke. By the way, the first level resistance I had at 97.83, which that was where we rotated around. Then we got new selling,
Hmm.
took it down underneath session VWAP. But does that candle at the lows, does that look familiar?
Yeah, if you're looking at regular trading hours, it does.
Yep.
That
And
is
we
the
broke. Yeah, it's the
that's right on the
same
Fed.
candle.
Yeah, it's right on the Fed.
Was it right on the Fed? We
Yep.
broke, we closed above that candle and we made new highs, which where we are right now.
Yep. Ton of
By the
opportunity in
way,
crude. Right, coach?
I had the 200 moving average. Yeah, right up. There you go.
Yeah, right there. High volume right at that 200 moving average. To answer some questions here, we got are most sellers of crude oil above $100 the producers locking in sales of inventory or just speculative traders? I'm gonna say I'm not sure on that one.
Uh-oh.
I heard
My
he- I
suspicion.
heard airlines are not hedging their crude purchases, or they weren't, and they're in trouble. But what do you think, Coach Wall?
Hmm, um, okay, I have a couple strong opinions there. If first of all, you talked about airlines didn't hedge. Do they fly their airplanes without insurance?
Yeah, I don't understand the decision not to do that, but
They don't have to do futures. They could buy calls.
yeah,
Anyway, I'll leave it at that. Good.
right,
You didn't. You deserve the beating. Sorry.
right.
Um, Second one is most likely, and this goes back to the basics of the futures industry. It was designed for hedging. So producers, they hedge. So because it was over 100, I don't. That might not be it, but they're always like I work for Farmers Commodity Corporation. I ran their operations in Chicago. It was a conglomeration of 800 grain elevators throughout the country. Grain elevators, they take corn in from farmers and they store it. But they have some risk. It's to the downside. As soon as they take 5,000 bushels, they sell a futures contract. And this is how, and by the way, it was over 98% of their activity was selling. They didn't speculate. So bringing that into the question about crude, yeah, I think that the steadiest sellers are going to be producers of crude.
Yeah,
And that's probably the only sellers. Besides some speculative, but selling by individuals and maybe some funds. But for position trading, I would say most of it now is going to be producers hedging against a lower price, which good producers do that consistently. Great question.
good question. There was a question from Marcus. We wait until VWAP leaves the 30-minute range for shorts. It really depends, Marcus. I think when you asked that question, we were looking at the equities and just a reminder, this is how I'll look at it in the overnight session for opening range breaks with VWAP. I think Coach Paul and I are both looking at 30 minutes because we're giving the market more time for volume to develop and choose a direction. For me, during regular trading hour session, when there's more volume, I'm looking at a 3 minute. I'm looking at a shorter time frame. So in this case, if I was trading this correctly after the Fed rate decision, I got a 3 minute candle. And in theory, where should I be short when price and volume leaves that range? So in theory, my short should be somewhere around here. Risk goes on the other side. Price and volume left the range. Now I'm getting short and then letting the market go from there. Same thing on a 30 minute. Where did we see urgency last night on a 30 minute? Here's last night's range. When am I getting long? Ideally, when price and volume is leaving the range. That's in theory. Anybody ever learn anything from a textbook or a driver's ed course? And then no one drives with their hands at 10 and 2, right? So the execution of it is going to be up to your interpretation. But in theory, that's what we're looking for: price and volume to leave the range. Sometimes you earn the right to shoot from the hip, where it's, hey, it looks like that volume is going to leave the range, but just understand when you're shooting from the hip, you might not hit your target. There's essentially lower probability that you hit your target. So
You might even hit your foot.
yeah, right, right. So in theory, that's what we're looking. Price and volume to leave the range. 9 and 3. It's just like one hand on two, maybe a hand on seven. Right. It kind of depends. Depends on the vibe. Depends on the vibe and where I'm going. If I got to get somewhere urgently, my right hand's usually at like 10, somewhere around there. All right, let's get to gold, and then we will talk a couple more questions. Gold, gold, gold. How do you lose money shorting gold?
Tell us.
You sell it before it's ready to go. Uh, What a beautiful sell-off today in gold. Overnight session didn't really give us a whole lot. Actually, let's go back to the daily because somebody talked about these two daily dojis yesterday that was a signal for a big move to come. Uh, Go ahead, Coach Paul. I'll give it to you.
Oh, yeah. So, well, where did we talked yesterday about those tiny ranges on the daily, which we could see in the half hour and VWAP going sideways. In other words, we have larger term balance. Markets move from balance to imbalance continuously. This was extreme balance. We haven't seen small daily ranges like that and no movement. That means the larger players in this market have come to their actions have come to an agreement. Let's put it that way. When that happens, just look back. You don't see that too often. So my idea was to buy a strangle, um, or watch the opening range, or look for a clue. We got it to the downside. Now, part of me is not surprised it was to the downside because what we're in a we're at near all-time highs relatively.
Yeah.
Who's going to be more nervous?
Anyone holding long and prices not going up, especially right at five
Yep.
thousands. It was holding for a while until it didn't.
And we've been seeing this in crude in the last month since the Iran war started. Crude starts rising and gold starts breaking.
Yeah.
That is change. You would think that gold would be leading the way. Inflation, crude oil railing, war. These are all things to buy gold.
Right.
And yet gold has been slipping. Uh, the way I read that is there's entities who own gold, central banks, governments, whatever, that are selling, taking money out. And now that is a reason, but when going back to this particular trade, you would be careful when you see that. By the way, that was on your 50%.
Right there.
I mean, that
We
was another balance.
we couldn't sell it settle it above it. I pulled up a calculator here because I want to do something. We talked about daily ATRs yesterday, and if everybody understands how averages work, right? So had and one of the ways you can start to put the puzzle pieces together for the day that you're coming into. We talked about this yesterday. Today's Wednesday. Monday's range was 74 points, and I want everybody to pay attention to a couple of numbers. Coach Paul, if you could slide to the left there, can we see it?
Stage left.
The daily ATR is what I'm trying to get to here.
Oh,
Uh,
here, I'll
the,
just disappear.
okay, the daily ATR in crude oil, 148 points. Right? So just keep that in mind. That's the average daily range for the gold market. Monday's range, 74 and a half points. Tuesday's range, 72.4 points plus 72.4, right? So 146 point. And if we divide that by two, the average is well under still. So at some point, if we understand how averages work, at some point we need an outlier day to get us back to average. Right? So the more I see consolidated days, I'm actually welcoming that because at some point the market cannot continue to hold in this tight of a range, right? So to start the week, we had a daily ATR of 73 points, right? So 73.4. And then what happens today on now put the whole puzzle together. What did we have today? We had PPI, had Fed rate decisions, all of these things that are potential catalysts for range expansion. So once we start to see that range expansion, you can almost cut off one side of the market when it decides to go in that direction, right? Once we broke these lows here, the range expansion is on, and that's what the market was telling us it needed, right? How many days are we going to stay in this consolidated range? And we have a day that is looked at as potential catalyst. So here we go today, plus 212. What was it? 74 4 plus 72 4 plus 212 70. That gets us closer to the average. Hopefully that makes sense. I don't know why I just went into math teacher mode, but looking at those daily ATRs and those consolidations can help predict a range expansion day. Without being personal to the people here, can anybody explain the purpose of this review? Tone is that regardless of the instrument, today's move was predictable, explainable, but it sounds like neither of those people took those trades. Here and thought feeder. Uh, Good question. I could show you the executions that I took in oil. Here. Sound like a new viewer, so thank you for joining. What we do here is review so we can make these decisions in real time. If you look at my Instagram, which I can link here as well, uh, give me 1 second here. We want to make sure we share information. Check out my Instagram page here. You can see the trades that we took in crude oil last night based on a process that we talk about here every day. Executions in crude, and I had a losing day today. So again, I'm not perfect. We're still traders at the end of the day. Here are the executions in crude oil that had me up about $1,500 last night before I made some mistakes in gold. This is as much as a review for me as it is for everybody else here. We've had some people who have helped refine their strategies with some of the stuff that we teach here. We don't pretend to have the answers at all. But what we want to do is similar to a professional team watching game film after the fact. How can we reverse engineer what happened in the markets so then we can see those decisions in real time and then make those decisions? Thank you for joining. We appreciate you being here as a new viewer. Hit that thumbs up button if you haven't done so already. Tell your friends and family to like and subscribe. And if you have any questions about our process, let me know. Coach Paul, anything else you want to say to that?
Oh, one other thing. Thanks for viewing in. We've had this question before. Is we review what happened during the day. We're not a social media um, outlet. We go through different markets, and a part of I've been around a long time. This is not a prediction. We do not. We look for repeatable trades that we've been doing for 3 years. Some of it, yeah, it looks obvious, but the idea is to review so we can find repeatable or structure that we can take risk in. So join us again if it works for you. If not, thanks for stopping by.
And again, sometimes our execution is going to line up with exactly what we say, but we're human and we're traders at the end of the day. So I could show you my losses. They were selling gold before it was ready. Uh, the flow in gold today told me that I needed to be short. Where I was getting short was in the hole, right? So there's theory, there's execution of that theory. When you put both of those together, that's how you get paid. And in gold today, probably a little more aggressive than I needed to be, which leads to losses. Again, if you got any questions, let us know. Anything else you want to say about gold, Coach Paul?
Just a very negative close, and it has the kind of close that can lead to further liquidation to the downside. Um, Look at that daily. This kind of action is non-random. So that's it for gold.
That is it for gold. Any other markets you want to talk about? We got a bunch of markets moving, or do we
You
have
know,
enough here?
let's look at natural gas because we're not talking. There was a hit on a major natural gas field in Iran. What kind of damage it did, how it affects markets, but natural gas is lagging here. Why? This is a U.S. contract. for delivery in the
Mm,
US. But at one point, that natural gas c can make a big move. It wasn't called the Widowmaker for nothing. This market is starting to turn. If we look at a line chart, we're holding the 50 moving average. We're finding, look, they're lining up, and we're still above the 200 moving average. This is on my radar. Yes, Billy, it seems relatively calm given current events. Um, and now looking at this chart, we have the flagpole, that large candle from when was that? From January. We've corrected down and we're holding. But what I like about this is the 20 and the 50-day moving average are about even, and we had a nice rally out of that.
yeah,
This has potential for rip to the upside. Key potential. It
potential.
is on my radar.
One other thing for Thought Feeder, and again, shout out to you for joining and asking the question, right? Genuine question. One of my favorite parts of At the Buzzer is when you'll hear me ask Coach Paul, is there any other market he wants to look at, anything on his scouting report? Uh, and sometimes we might find a market that is about to move before it does. Coach Paul still has the call of the year when in December 2025, he said crude oil had the potential to be the market of 20. We're seeing it happen in real time. I'll be honest, I watch a lot in the trading space. That man right there, to the right of the screen, the first person I heard say that. So uh, sometimes you get a little gem. Anything we say here is for educational information purposes only, not a suggestion to take any trades, not investment or financial advice. Sometimes you leave with a couple Easter eggs. So thank you for that, Coach Paul.
You're
Um,
you're welcome.
all right, I think we went through all the markets. Like I said, we're gonna do something a little different today. We'll try this. You guys let us know how you like this idea. But I had somebody in the YouTube chat a little earlier who's in our ask if we could do a an account review. Um, if we could go over their trading stats, you have the performance stats in Topstep X that everyone has. So if you are in the chat, give us a shout out here. Internet before Jay. Give me 1 second here. Uh, hold on one sec.
Patience is a virtue.
Patience, patience. All right. Well, why does it only show up on those? 1 second here. I don't have any top step accounts, but I really enjoy watching you guys every day. Excellent for us newbies. Thanks for all you do. Thanks for joining, Randy. If you don't have any top step accounts and you were looking to get one, you could get $26 off of a top step account right now by using the code AlexGold. Shout out to Alex Ferrer winning the gold in the Olympics. Topstep is celebrating Alex's gold right now with a $26 off code for any combines. It's the first. That's the maybe the first and only time you ever guys are ever going to hear me push a promo code. But
That's yeah,
it's a well
that's the
deserved one.
first.
That's a well deserved
Yeah.
one. All right, here we go. Give me 1 second here. All right, and all right, there we go. So if you are in the YouTube chat, let us know if this is your trade report. This is what's good in the Discord chat. Ask, could we review this trade report? And I asked, for a little bit of background on this because when I first pulled up the trade report, I see nothing but good things, right? Traders up $21,000 in this account. And they said, my goal is to get to live so I can eventually get to larger balance and payouts. So far, I am just taking, pivotal word there, just taking 5K out a week. Like 3 weeks ago, I took out 15K out of two accounts. And this is the last one that survived. And I keep taking payouts weekly now because I'm concerned with losing it or getting more payouts or going to live. I suppose that is my overall thought, but nothing super specific. It's only a month old. So, a couple of things I want to get to there. And I always ask anytime I see a trade report, I'll be honest. I saw this trade report and I said, okay, what do they want me to say? This trader's up $21,000 in a month. Looks like they're trading really well. This drawdown here was clearly a payout and not a loss because you don't see many losses on this account. So what could this person be looking for? But in your message, what you said was, you've lost two other accounts, uh, and you are looking to get to live. When you say you just took out 5K a week, 5K a week is, you're
two hundred
pushing
and fifty thousand dollars a year.
you're pushing doctor salary, right? So, and we got to put in perspective what it is we do. We sit here and click buttons for a living. Um, Obviously, there's a lot that goes into it. There's the mental pressure. There's the financial pressure of doing it. But be able to take out 5K from an account that you paid $150 for is solid, right? So frame that in a way that motivates you to keep going is what my suggestion would be to start. Um, Well, let's just see, right? We have an XFA that's been open since February 24th. I see 3 losing days in this account, so you're trading really well. The first thing that I really noticed, couple of things here. A lot of trades, right? A ton of trades. 316 trades on the first day in this account. Now, I understand the way Topstep counts these. If you're trading with multiple micros, it's going to count each transaction as its own thing. Um, but that is a decent amount of trades, right? I see 237 trades on a day. So there are a ton of executions that are going through this account. What I do like though, Coach Paul, is that I don't see anything but micros.
Yeah. And I'm glad you brought that up because one of the things that by the way, this before I start on that, this is a great track record. So if I get the question right, you're getting the payouts and you kind of fear that this is all going to end.
Yeah,
Is that it? Like, and that's a concern, right? For anyone. But looking at your track record, remember it's been disciplined. So whatever you're doing is consistent, and that is the consistency is discipline, and discipline is destiny.
yeah,
Um, Now, and this is very similar when you're on a run like this is, oh my God, this is, oh, I don't want this to end. Now, here's the mindset. You
uh-oh.
look, is nothing changes. I call it a non-random mindset.
Hmm.
And it takes a little experience is I'm just executing my plan. I'm not focused on winning or losing. I might lose, but it's contained. So far,
Yeah,
you've been contained. Just keep doing what you're doing, whatever it is. And that is, it's easier said than done. But focus, I mean, this is why, and when we're coming to the end, is why I say this trade your plan your trade. That brings consistency of decision making under pressure. So great record. Don't act in fear like it's going to go away. There will be some drawdown. Expect it.
that's the biggest thing. That's the biggest point I can make. We can't, for whatever reason, the trade report's not loading again. I think we're heading into that maintenance window, but that's my biggest thing as well, Coach Paul. You have had 18 days in a row that you haven't lost in this account. Uh, as long as those 18 days are a result of you following your process, when a loss happens, make sure a loss is built into your process as well, right? There are a ton of times where a trader doesn't plan for that, and I'll be honest, after a while, it maybe feels like you don't have to plan for it. Like, hey, I can't do anything wrong. I'm seeing the markets really well. I'm executing really well. You're going to lose eventually. It could be. We had Henrico on for Fast Markets today. 83-day win streak in his XFAs. He's going to lose eventually. It might be 830 days before he loses. But if that loss is not measured, what can happen and what sometimes tends to happen with traders is that the loss is way bigger than expected because it doesn't it stops becoming trading right and it starts becoming protection of an identity or an ego that I don't lose trades. As long as you measure for whatever your loss is eventually going to be on whatever day it is, and you built up a decent amount, a decent balance, as long as you measure whatever that is, keep like Coach Paul just said, keep doing what you're doing because it's going to happen. And I've seen traders, really good traders who can put up really good numbers that maybe haven't been the best risk managers. And I've been that trader as well, right? Where I'm a really good trader, I could put up numbers, but I don't manage my risk. And then when the trader ego has to take a hit, the risk manager never steps up and says, "Hey, I'm out. Come back tomorrow because you're not seeing things well." I've seen traders that we've coached lose a 50K XFA in a day. I would hate to see that happen. And don't, David, I see you in the chat. If you don't want to lose it, don't think about losing it. Set a risk parameter in place that there's nothing you could do to lose it, and then just continue to do what you do. If one day you start seeing you don't see the markets well, the loss is already managed. Um, but keep trading well. An account like that is what the live account team is going to be looking for moving to a live account. So you're doing your job, keep doing it. Keep getting paid. And I would say don't even focus on getting the call up to live. Focus on continuing to trade well. Take your 5K a week or whenever you're eligible and keep building that balance.
Great job. I want one other trade shout out to you, YU Bruce one.
Okay.
Hello, I passed 2 combines and have 4 days of $150. You, on a smaller scale, it's the same success. You've passed the combine, you're consistent. Don't don't try and, over trade. Continue in that mindset of success, continuation. If you have one last thing I will say, if you have a losing day or two, one of the first reactions is, what am I doing wrong? I got to change this, or I have to try and get that money back. Be aware of that.
Yep.
Don't let that bring you down. So great job, and we'll talk again tomorrow.
Rapid fire real quick because I promised some answers to questions. Then I realized what time it was. Pretty Lily had a question. How do you know or develop your edge? I think I have an edge, but I'm not sure. Couple of ways. So I think first, trading is pattern recognition, right? Some of the stuff that we do here, we only repeat every day because we saw a pattern that looked interesting enough to continue to research, right? So if you think you see something every day, that might be an edge. You could be the only person in the world that sees it. If you think you see it every day, what I would do, what I did with the 3 minute opening range with VWAP leaving the range, look at 1,000 charts, 1,000 different days, and see how often it plays out, and write down the characteristics of a day where it works and the characteristics of the day where it doesn't work, right? And then that's how you identify. To me, that's how you identify things in real. Right? It's a way of backtesting. You could use backtesting software and things like that. To me, that was a little too time consuming. So I just found 1,000 days of charts and mapped out the trade until I said, okay, when this looks like this, there's a high probability that this is happening. So reverse engineering to me is the best way to identify an edge, and then implementing it in real time when you see it. All right, it's all pattern recognition. What's my favorite trading content to watch other than Topstep, of course? Shout out to Rips. I watch Rips all the time. Oh, uh, Shout out to Nick for a Tick. His trading course, I thought it was great. He posted on his Twitter, free trading course with all of the paid trading courses going on out there right now. You don't have to pay for one. There's a bunch of people in the trading space, of course. Anybody at Topstep. I join the coaches' classes in Discord every once in a while, and I'll hang out in there. Coach Paul's pivot class, I think, is great. But there's a ton of good trading content out there. Most of it you don't have to pay for. Uh, but I think that's it, Coach Paul. Anything else you want to say before we get out of here?
Yeah. Well, have a good night. Plan your trade your plan, and be consistent. And we'll talk again tomorrow.
We will talk again tomorrow. We got coaches doing classes in Discord. Coach Hoop after this, 6 p.m. Eastern Time. Coach Ray, 7 p.m. Coach Vince, 8 p.m. Coach Dakota at 8 p.m. Eastern with slow markets. I'll be joining him for that. We got Aaron with the London Open, 2:30 a.m. Eastern time. D with metal markets at 6:30. D was trading silver this morning. Really nice silver trade that she had there. So make sure you join D for metal markets if you're up at that time. Then we'll be back for the opening call tomorrow at 8:15. Trade well, everybody. Manage your risk, and we will see you all soon. Bye.
Ciao.